Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Arthur Cohen, who's the founder of Arthur Cohen Insurance, and we'll be talking about policy review. Arthur, welcome to the program.
Hi, Mike. Thanks for having me. It's really a pleasure to be here with you.
Hey, you're welcome. And I know that anytime you hear the word review, that's a really positive word because you want to view it again and make sure of where you are. So I want to dive into policy review and your thoughts and recommendations there. But before we get into that, give us a little bit of your story and background and how did you get into the financial services industry?
Okay, thanks for asking. Well, I went to school in New York. I had my education upstate New York in State University of New York in Binghamton, and then I moved down to Florida in 1977 to take a year off before going to law school. I interviewed with Metropolitan Life back then, and I took a job. It was very difficult because I didn't know anybody in town, and I ended up staying in the insurance business all these years later. Actually, there was a time where I had gotten my Series 7 license, which is a license, as you know, to be a stockbroker. And I decided that's not for me because I didn't want to be responsible for people losing money. And that's why to this day, everything I do is about safe money and holding on to what you have.
Yeah, that's really important. And what that tells me, and I'm certainly not a psychologist, but if you have that kind of empathy and care for people, like I really don't want to get in this side of the business because I don't want to have the feeling that I might have an occurrence where I would have someone lose their money. That shows that you care for your clients. And that's a great relationship to have when you're working with people talking about their financial future. So we're talking here about policy review. And I know there's a lot of types of policies. So talk a little bit about the types of policies and how often people should review them.
Okay, well, so one of the things that's always frustrated me about insurance planning is that if you're like most people, you probably haven't reviewed your different insurance coverages in years. And this could be a really big mistake because it's important to make sure that your insurance policies are commensurate with your stage in life. You know, people get an annual physical. You go to the dentist once a year. You even have your car inspected periodically. And insurance is no different, yet it's so important. Too often policies are purchased and forgotten. And in my world, what we're talking about is life insurance, long-term care insurance, and retirement planning. So those are the kind of policies that we talk about.
Yeah. Well, and talk a little bit about each one of those, because I feel like a lot of times people really don't really get the full import of what each one of those policies would represent.
Okay, thanks. So common sense dictates that we should review our policies every 3 to 5 years, let's say. And you know why? And I think this will answer your question. To make sure that the needs are met. Life happens. Circumstances change, both positive and negative. You know, there are births, there are deaths, marriages, divorces, special needs for our loved ones, you know, young and old. For example, on life insurance, beneficiary designations, if they're out of date, they could contradict the whole purpose of having the insurance in the first place. Some people don't realize that their beneficiary designation is all wrong. They're listing an ex-spouse or their underage children as their beneficiary. Some people no longer need life insurance because their beneficiary predeceased them. In that instance, maybe we recommend selling the policy on the secondary market to a life settlement company rather than surrender the policy for the cash value or just eliminating the policy altogether. Because a life insurance policy that's no longer needed is still an asset, a valuable asset that we could, you know, convert into money. Existing policies might fail to perform as intended if the internal cash value buildup is too little or sometimes too big, we make an appropriate adjustment. Sometimes sophisticated premium finance policies, I don't know if you're familiar with premium finance, they don't perform as anticipated, and this could create a huge problem. So we fix
Mm.
those problems. Um, with regard to long-term care insurance, I like to look at people's policies because not everybody has expertise in long-term care insurance. Even, people think that their CPAs know everything about everything. And CPAs, when they get the question, they turn to me and ask me about it. And I've looked at policies that are maybe only home health care policies. And
Mm.
that can be a big mistake because home health care isn't the only thing that could affect us. There's a 70% likelihood that we're going to need care. And most people prefer to stay at home. But what if you have to be in assisted living? I see this all the time. Or what if you have to be in a nursing home? So again, we fix those problems. When we look at annuity planning or retirement planning, I like to use fixed guaranteed annuities. And we could get into that, in another episode if you'd like. But when I look at somebody's financial overall plan and there's not enough there for safe money, the money that has to last them the rest of their life, that's when I get involved and I make recommendations. So the only way to uncover that is by policy review.
Yeah. There's many things in there that I know that you'll unpack in some of the examples that you can share. But one of the things that jumps out at me is it's not like the initial policy was set up incorrectly, because if Arthur Cohen set up that specific policy one particular year and then 3 to 5 years later you're doing the review, it's not like if adjustments need to be made, oops, we set something up wrong. It just may be that the initial purpose that it was set up for might not be still needed. Maybe you mentioned about the spouse or the long-term care, or, oh, we need in-home versus nursing home. Oh, we need dementia care versus. It's not like a mistake was made. It just means that given this stage of life right this minute, 3 to 5 years later, we might just need to pivot or polish it up just a little bit.
That's exactly what I'm talking about. Because life happens, people's
Yeah.
circumstance change. That's what happens from day to day. And unfortunately, we don't have a crystal ball and we make plans and not always do our plans work out the way that we anticipate. In a family, so many things could happen. For example, if there's a life insurance need and the beneficiary designations are wrong, and let's say it's for a family business and there are 4 children that are in the family and only 2 of them work in the business, when the owner of the business, who might be the father, passes away unexpectedly, everybody feels like they're entitled to their own share,
Yeah.
and that doesn't always make sense because maybe only 2 of the kids are actually involved in the business. So the way that, you make everything even keel, so there's no resentment, is by getting the right amount of life insurance. And, when the business takes off, we have to make those adjustments periodically.
Yes. Excellent. Well, I tell you, it seems like you've had a lot of scenarios and clients you've worked with over the
Oh,
years through your
yeah.
experience. So tell us a little bit about some examples or stories that you have worked
Okay.
with that would help illustrate this.
Okay, well, so yeah, in all these years, I have some horror stories and some very heartwarming stories that continue to give me a passion for how I help people. And I really think I have a calling for this because I help people by uncovering, problems that they don't even know that they have. And so, for example, I'll give you a couple of stories that aren't great stories. There was a guy, a 40-year-old, and I remember he was older than me at the time. I wasn't quite yet 40. And he had 2 little girls, and he was married, and he had a law practice, and he had a partner in his law practice. And at the time, I was doing group health insurance. So I saw him on Friday, and I said, we never talked about life insurance. You have 2 little girls. And his answer was, please, Arthur, I don't plan on dying anytime soon. So, P.S. That was on Friday. He said, come pick up a check from my secretary on Monday for the group health insurance. And I called before I went there, and she said, Michael died on Sunday. He fell asleep watching TV with his wife, and he never woke up. And it turned out he had a bundle branch blockage that he was completely unaware of. And, had we talked about it, um, to the extent that I could have taken a check from him on Friday, he would have been covered for over the weekend. So that's one of the horror stories that shows the importance of having proper planning. You don't have little kids without any way of protecting them.
Yeah.
I'll tell you another story, not quite as horrible, but I had a client who the husband and wife, the wife wanted long-term care insurance. She realized the value of it. Again, there's a 70% likelihood that we're going to need care. Who's going to pay for it? So she wanted to make sure she had a policy. So we did a policy. She held on to it for a couple of years. And then the husband said, you know what, I don't want to pay these premiums anymore. Drop the policy. And a year later, she's in a wheelchair. She's been in a wheelchair for 5 years now without any long-term care insurance. So that's another terrible story, but it exemplifies the importance of having the right kind of planning. So if it's okay, now I'll tell you a couple of good stories.
Yeah,
Okay.
yeah. Let's end with some good ones, huh?
All right. So um, there's a couple that lives across the street from me. They never heard about long-term, and I'm living here 25 years. They never heard about long-term care insurance, never even thought about it, and they were in their early 60s. And so I made sure they both had long-term care insurance. Well, now the husband is in his early 90s, the wife is in her mid 80s, and they're collecting over $12,000 a month to pay for their care. Because if nothing else, if you continue to be healthy, if nothing else, frailty sets in as you get older and you need care, you need help. So that's a good story. Um, I could go on with other good stories. There was a 38-year-old that I met, he and his brother, big guys, and they were both diabetic. They were twins. And at the time, there was a company that was taking early stage juvenile onset diabetes, and I made sure they had a policy because, diabetes can be a precursor to many problems down the road if you don't take care of yourself. So I made sure they
Yeah.
had a policy. Well, one of the brothers, when he was 42 years old, he got a brain tumor, and he was on claim with this policy for 3 years before he passed away. So, maybe that's not a good story, but the
But
surviving
it's a story of
spouse
protection.
of protection, and the surviving
Yeah.
spouse called me and said, "You're not going to believe what happened, but if it wasn't for you, we'd be completely bankrupt by now, and I would have had to I would have had to sell the house, and I don't know what I would have done." So she remembers when we sat at a table and I took a napkin. I guess in those days I wrote it on a little napkin. I made a
Mhm.
diagram. It stuck in her mind because when I do planning, you have to be able to talk to people in a language that they understand. And I felt in this case, to make a little diagram, it just made common sense for them to understand what we were doing to protect their life
Mhm.
savings. And
Wow.
that's what I take pride in that.
It really is important to have someone to depend on because you don't ever think something will happen until something happens. And I think
Right.
through some of those stories there that gives some of the positive side of things, some of the negative side of things, but having that protection is just so important because it gives peace of mind. And I think
And,
that so many times people don't you can't put a dollar value on it. We know that, but it's almost like unbelievable dollar value to have that peace of mind knowing that you're taken care of.
and you know what people don't really understand? Because everybody thinks they're impervious to this, but bad things happen to good people all the
Mm,
time. And we need
yeah.
to be prepared just in case. And, I'll tell you one more quick story if it's okay.
Sure.
Uh, a husband and wife in their 60s, professional people. So I looked at their long-term care policy and it was lacking. It was an old-fashioned, only home health care standalone policy. So there was no nursing home or assisted living coverage in it. And they said something to me that I've heard over and over again. If I ever have to go into a nursing home, I'll just shoot myself, you know?
Mm,
And what I ended up doing was I gave them a better policy that covered nursing home, had more benefits in it, and it cost them a lot less in premium. And sure enough, the husband, who was actually literally a rocket scientist, that's what he did. He had to have some heart surgery, a minor procedure, and during the procedure, something went wrong. He didn't get enough oxygen to his brain and he ended up with a cognitive impairment. He ended up in a nursing home for quite a few years, and the policy that I provided to them paid for the nursing home. So,
wow.
that makes me feel good about what I do, that I help people.
It really is. And I tell you, sometimes I think someone might be gone. Maybe I should dust off my policies that I've got and just see if they are performing the way that they were intended and given my current circumstance. So, what if someone has a few policies like that, long-term care or annuities or life insurance? What about getting a second opinion? Would that be smart to come to you and have you look them over and see if they're in a good spot?
Oh, 100%. I mean, I have a way of, because of all my experience and because of everything that I've seen happen with my clients, I have a way of looking at things through a different lens. And a second opinion that I provide, I think, would be very valuable. And the best way to get hold of me is go to my website, and it's arthurcoheninsurance.com, or give me a call at 305 595-0001. And I'll be happy to do a Zoom or a phone call or an in-person meeting if it makes sense.
Excellent. Well, Arthur, thank you so much for coming on today. It's been a real pleasure talking with you.
Likewise, Mike. Thanks for having me.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.